Well, now an update on what's happening in the markets in Singapore. Singapore stocks ended in negative territory for the third straight session, and this came ahead of the incoming US President Donald Trump's inauguration on Friday, as investors are worried about what a Donald Trump presidency would mean for the economy. The benchmark Straits Times Index, or STI, ended 13 points lower at 3,000 points. Well, for more on the market action, we now have on the line Andy Remizier at Phillip Securities. Andy, why were markets mixed ahead of incoming US President Donald Trump's inauguration on Friday?
Hi, Justin. Market was down following the US market as Dow Jones fell slightly by 0.3%. The US index descended in response to the remarks made by the US President-elect Donald Trump that USD was overly strong. So the US stocks softened last night, and Asian market traded mixed, with Hong Kong stocks faring well. So Hang Seng Index up more than 1%. Singapore FTI fall to the low of 2,990 and managed to recover the losses to close at 3,000 points. So overall, market was pretty concerned about the Donald Trump inauguration this Friday, but we have not seen any big surprise move yet.
Well, turning our attention back to Singapore, the company earnings season is gearing up in full swing. What's your take on this, Andy?
I think with the earnings coming out, market will be more exciting and also expect to have more volatility. Next week, 26 Jan, we will see Keppel Corp earnings, and with the price moving higher over the past 2 months for Keppel Corp, I think this will be telling us that the oil stocks is recovering. So I think we can look forward to watch some of these oil stocks earnings.
And Singapore's STI is hovering around the 3,000 psychological mark. Is the local market due for a correction?
So over the past 2 months, most of the gains on the index were stocks from the bank sector. So however, the rest of the other sector did not really have a big move. So hence, if there is a correction, I would think that the banks will probably pull back slightly, as it is at the overbought region for a pretty long time. So with the US dollar weakened last night, I see that some of the stocks started rally in Singapore and Hong Kong. So hence, if STI were to pull back below 3,000 due to banks having some pullbacks, some of the other sector might play catch up and move higher. And hence, instead of pulling out our money out of the market, I will adapt to the stronger stocks in the oil sector or the food sector.
Andy, thanks for talking to us this evening. That was Andy Remizier at Phillip Securities. Well, in company news, Sembcorp Industries has